All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 14th, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode 485. So my name is David Cosmeter. I'm the creator of TimingResearch.com, and I have arranged for an excellent panel to join us tonight. But before we get to that, I just want to remind you to mark your calendars for our next big Synergy Traders event. That'll be coming up next week, July 22nd, 23rd, and 24th. So Tuesday, Wednesday, and Thursday. And that'll be 10 a.m. Eastern Time until 8 p.m. Eastern Time each day. And the topic for that will be 30 favorite indicators. So I've invited 30 educators, and they're going to share their favorite trading indicator with you. And so should be a lot of good information. So that will be live on TimingResearch.com. You can just come to TimingResearch.com and you'll be able to enter the room. So, all right, now for today's panel. Today I've arranged for Harry Boxer, Michele Schneider, Norman Hallett to be our panel, and the option professor is back to moderate. So I'm going to turn it over to him.
Okay, thanks a lot, David, and welcome everybody here tonight. Big day again in the markets, and of course, for the last 6 weeks, it's been a big period of time for the markets. And tomorrow we get that CPI number. So, if it's not shocking at all, it'll put more pressure on the Fed to maybe cut rates. We'll have to see how that works. Tonight we've got Harry, Norman, and Michele here, and so basically we have the S&P chart up right now. I thought we'd start with Michele. And Michele, why don't you give us a little idea of what you think's happening right now, and what's your short-term expectations of what will be happening with the S&P?
Well, let me just get to a full screen here so that I can see
Sure.
and say hi to everybody.
Yeah.
Okay, well, actually, if obviously you look at the S&P as you're looking at right now, it's hard to make a bearish case for that. But what's so interesting about right now is that as of tomorrow, one of the indicators that we use, and you mentioned this this thing next week with favorite indicators, Jeff Bish, who is my partner, is going to be introducing another indicator. But one of the things that we're talking about here is the calendar range. And so it sets twice a year, once in January and once in July. And we have the July one about to set. So what's so great about that is we're going to get a really good view of not just the S&P and the NASDAQ, which clearly looks like it's still continuing to explode to the upside, but what's going on with some of the more inside sectors. So to answer your question, I would be very curious to see what happens to the Russell 2000, the retail sector through XRT, and the transportation sectors through IYT, because those are what Druckenmiller called the inside sectors, because they're US centric, and they'll give us a good idea about how much the market is convinced that all of the recent policies with tariffs and BBB have worked. And if those things can break through last week's high, which is way lower compared to all-time highs versus the SPY, which made new all-time highs, then I think we've got ourselves a nice bull market in spite of the seasonals suggesting the otherwise.
Now, you had a couple of ETFs. I'm familiar with the two I heard, XRT and IYT, but was there another ETF that's important?
Yes, IWM, which would be the Russell.
Oh, the General Russell, right?
Yes, exactly.
Yeah, and well, why don't we throw up the Russell here? Yeah, I've been a big believer once it got above 200 that the tide had changed, and once above 215, I thought it was kind of a breakout. So if it pulls back, 215 should be about as far as you go. But you think it's got a big future ahead of it, huh?
Well, I think the potential is great. I mean, what you're looking at right here is, and you don't have the chart that I've been looking at because I have these calendar ranges. But since the very beginning of the year in early 2025, IWM tried very hard to break out, but it failed pretty quickly. And since that period, so we're
You
talking.
want to go ahead and share your screen?
Oh, sure, I would love to.
Yeah, and could you further explain the concept of calendar?
Yes, I think it would be easier if I can share my screen. And
Yeah.
I'll share now.
Because that's foreign to many people, including myself.
Okay.
And myself.
Well, good.
And we've been around the block at least twice, right, Harry?
Yeah, well, yeah, I've got a bunch of vets here and I can teach them something. How cool is that?
Me three. That's if you could teach an old dog new tricks.
All right, so what you're seeing right here, this is the Russell 2000, right? And if you take a look at, I'm going to scrunch it up a little bit because you're going to see a series of horizontal green and red lines. And those are the calendar ranges. And basically, particularly when we have a new administration, they're very powerful in terms of deciding those that break out, which are going to trend higher for the first 6 months of the year versus those that are going to trend down. You can have reversals where it can go through the calendar range and then come back in. Obviously, it's not a perfect instrument. But what makes this one so interesting is if we just go back in time a little bit, let's go to 2022, right? That was our last real bearish year. We had the 6-month calendar range high here. This was right at the beginning of 2022. It broke down under the 6-month calendar range low, and it proceeded to sell off until it finally tested the July calendar range low, broke out through the calendar range high, and then it really kind of chopped around there. And that's been the real problem with IWM, is that we've had ups and downs, ups and downs, ups and downs, as opposed to what you just saw with SPY that has followed through much greater. So
Right.
why am I so interested right now? Because there's a couple of things lining up beautifully. First of all, this is the January calendar range high I'm talking about. So look how in the very beginning, it kind of looked like it was going to bust through. It didn't. Instead, it broke down under the low, as did everything at that point, long before we had that big April trough, considering the tariff information or, the Liberation Day. And since then, we've come back through that low, but we have not been, this is a 200-day moving average, so let's not confuse green lines. Since then, we have not gotten back through, just now as we're setting a new calendar range. And look how close it is to the January calendar range. So you literally have a 6-month calendar range from January, plus the 6-month calendar range from July. You're going to see the line show up on my chart as of a couple of days from now. But it's going to be right here above this 226 level. So what that tells me is that if we can get through 226, we're really going through almost a full year of resistance. That would be a really good sign. And of course, the other really interesting thing, though, is that the February, I'm in the wrong month here. In the July low is right around that 215 that you mentioned, right? So that was made right at July 1st. So on the flip side, if we break down under that, then we know we've got the 200-day moving average there. We may have a little bit more support under the 50, but that would actually be a bad sign. In between 226 and 215 probably continues to be chop zone, at least when we're talking about the Russell 2000.
Yeah, and that 226 was the recent high, so that makes it a fairly important point as well, huh?
Well, that's what I love, when we have the synergy of certain indicators all lining up at the same time.
Yeah.
And if you take a look down here, this is the leadership. This is how the instrument is performing against the benchmark, which in this case would be the SPY. And you can see IWM is slightly outperforming, and our momentum is above the moving averages. So everything is in play for the potential. If it goes through and fails, you know right away you're wrong. And of course, if it does break down into that 215, I think that would be a real sign for caution.
And just clearing up the last two, when we put up XRT, which anybody who knows that particular index has like a little bit of every single company you ever heard of in it.
Well, we call it, yeah, exactly. I call it granny retail, right? Because, I have my economic modern family, people who know me know about that. And so like the Russell would be Grandpa Russell, and this grandma retail. And of course, I named it after my own grandma, who had this incredible adrenaline rush, walked with a cane until she got into a department store. And then, of course, she forgot that she was in pain and would have a great time shopping. And that's why it represents really the exuberance of the consumer, 70% of the GDP, super, super important. So same kind of thing we were just talking about with IWM, some real big similarities. And by the way, we have to note that Granny, as I like to call her, peaked, look when, 2021. So anybody who has suggested that the consumer has really kept up with this market, not really. There may be pockets of it, but growth obviously has been the thing and has been the thing since we came back at the end of 2023, while this has really struggled since then. So if we go back to present time, here we were. Actually, this not only broke down back in the beginning of the year, and when you say it's a little bit of everything, I like it because it's consumer staples and consumer discretionary combined. So you get a really good sense of what people are spending money on and how much money they're spending. Broke down under the 50, never really cleared the 6-month calendar range high, broke down under the 200. See, when I talk about the synchronicity of indicators, the 200-day moving average and the 6-month calendar range lined up perfectly. People were still really bullish here. And we kept talking about the fact that there was something going on. And of course, that turned out to be correct. So if we go back to what we said kind of similarly to IWM, here we are. The high that this made was 81.70. The 6-month calendar range high is just a little bit under that, kind of like where we've been trading right now. And we don't have much to go. So if it breaks out there, this has a lot of room. That high was 104. I'm not saying we're going to go straight up there or anything, but it would be a really good sign for the economy. Also outperforming the SPY, getting a golden cross, not only in momentum, but you can see here even in the moving averages. And of course, your July low would be 76.46.
So Mish, can I jump in here because I'm new to this analysis? I mean, you know Carolyn Baroden.
Yes.
As we all
Fibonacci, yes.
Well, Fibonacci, and not only that, but years ago when I was interviewing her I had a radio talk show for years called Risky Business in the 90s. I did it about, and she was one of my favorite guests. She had a newsletter called Synchronicity. You just use that word. And what she would do is her newsletter talked about when different things come together, different indicators. That's it powers the possibilities. I mean, when I look at this, your chart, I mean, I see one thing: a gigantic head and shoulders bottom. I mean, it's and not only that, but the shoulders are equal. Everything is ready, kind of ready to go. And you're out, and I'm kind of a moving average guy. I'm a day trader. And when I look at charts like this, it doesn't influence me, the direction that I go, because that's influenced by the 5-minute or the 10-minute, whatever I'm trading. But it does influence me as far as the position sizing is concerned. When I see something like this, I'm looking to, and I see a possible breakout, which I want you to comment on. I'm going to favor that. I may put on an extra contract in that direction when I'm looking short term because of the influence, what I call the undertow of a chart like this. So I'm looking at a gigantic head and shoulders bottom. Everybody is looking at the same bottom. You've just synchronicity in a new way. I'm looking at the moving average, the blue moving average. That's the 200 coming up.
And the blue is the 50. And
that's the 50. And giving us some support here to the what Michael referred to. What from here? What should I be looking for? There's a lot of day traders, I think, watching this. What should I be looking for as a day trader to start to influence me on the long side or the short side?
Well, a couple of things. Like I said, number one is we made the high last week of 81.70. So clearly you want to see that get taken out. And it would be kind of a neckline. I mean, maybe we'd be off by $1 or whatever, but it would certainly look like the neckline of this inverted head and shoulders bottom that you're talking about, along with a July breakout, which has not been able to break out from the January since the beginning of the year. So what it would show is that we might actually have a sector rotation into something that has been so far behind since 2021. And you could come up with reasons why too. I mean, I love when I have a fundamental story, even though I believe that the price dictates the narrative. What we're looking at is tariffs, maybe not so bad. BBB, maybe some tax credits. Maybe interest rates finally do come down. All of this could help the consumer and their confidence. So this is all lining up right now. Are we 100% sure that this is going to happen? No, but what we do know from a technical trading standpoint, that is, if it does, you're going to know right away under, let's say, 78 that you're wrong. So maybe that's too far of a stop for a day trader. A day trader would probably look at 80, or maybe even look at something even narrower than that, like under 80.75 if they were going to get in over 81.70. But for my purposes, if I were going to put on a swing position for this, I would buy it on the breakout and I would put a stop under 78 and I would see what happens.
Gotcha.
Give it some time. How about we flip over to that transportation IYT?
Now, this is the bright spot, believe it or not. Now, a lot of this has to do with Uber, because Uber is heavily weighted in the transportation sector. And Uber's done great. I mean, Uber is not just a car service anymore, right? It's a delivery service as well. And so if you look at the railroads and you look at some of the other freight services, it's not going to look as pretty as IYT, but we don't care about that because we like to keep things clean. And in my family, it's very clean when we see a rotation. So we've already gotten through this 6-month calendar range a couple of days ago, last week, when everything else made new all-time highs, and it came back into today. So that's why I say this shows a little bit more relative strength. It tried it here, broke down with everything else, of course. But now I would say that if we can get back up and really hold above these levels, even if XRT doesn't necessarily do it right away, or if IWM doesn't do it right away, as long as they don't break down, what this is telling us is another really key area of the US economy is going to start to do better. Now, this made its all-time high a lot more recently than Granny. This made it in 2024. Here's your high at 75.79, 75.59, excuse me, you can see it. If you look at my chart and you look at to the right of it, on the top right, it says opening, high, low, and volume that day. That day, it made that high at 75.59. This day, it made a high of 73.26. So now I would say, even if it got through 73.26, again, I would probably not want to be in this thing if it broke down back under this low around 71.25. But if it does, even if the other two don't necessarily manage to make it through, I would get very bullish in the overall market, and I would actually be looking more for a soft landing at that point. Right now, we don't know if we're in stagflation or disinflation. The only warning I'll say is not only did this have a couple of days step down back under that range low, but if you go down here, this dotted line, this Bollinger Band line, we had a little bit of a mean reversion sell signal. So it's got to keep up. So if you just watch those three, I think you'll have a pretty good idea in the next couple of days with CPI and earnings, and that will give us a good idea what the Fed might do and what the dollar does and all of that. I think you'll know along with these charts what your next big move is.
Wow.
Yeah, Jim, this is Harry. I want to jump in on this. The thing that jump out at me is that the transportation index and the IWM trail the NDX and the S&P. Now, basic Dow theory forecast, if you're old school, said the transportation must confirm the industrials. Now, that's, again, old school. This is despite the fact that we've run up, we've gone at 5 waves, Elliott wave move to a double top resistance level. This is dangerous. If we don't break out, this is set up for a big hit. Now, I'm not saying that's happening, but I'm saying I'm uncomfortable when I see that type of a move into a resistance zone when the markets are ready. Get this. I'm going to give you a stat that'll blow your mind. The S&P 500 has now gone 55 trading days in a row without closing below its 20-day moving average. That's only the 4th largest streak in the last 30 years. The market is extended. It's overbought, but the trend is your friend, and there's no indication of a top yet. But I tell all my people every day, if you're not trading with stops, then you're being foolish because this is a very risky level in the market.
100%, 100%. And I don't mean to cut you off, but I love what you said, because that's why I'm showing you this. Because you can see that we had a fake out breakout here in the beginning of the year, and then another one, and the bulls all came out to play. But you can also see that it really did not go very far towards getting to up to those highs. And if you look down here, while this was happening, it was underperforming the SPY during this point, right? So it was already showing relative weakness. And also in the real motion indicator, we never really got very much momentum during both of these highs, never cleared the Bollinger Band. And once this started to break down under the moving averages, not only in momentum, but in price, and retraced itself back under that 6-month calendar range high, it was a sell signal. And the same thing could absolutely happen. That's why I like how everything is lining up here. And if it happens in transportation, right, I would say there's a really good chance that you won't see much of a move up higher in retail or in the small caps.
Yeah. This index also is 40% of Uber and United Pacific. And obviously, Uber's gone through the roof because of things like their Waymo association and many other things. But and of course, the UNP has done pretty good. But the rest of the pack, the UPSs, the FedExes, the JB Hunts, and all those guys, they definitely have been lagging. So that's why it's a good point that you guys make, that we could either be on the verge of a breakout, but this could very well be also a high point, huh?
Right, and so let's take another one, which is CSX, which is another railroad. It's just the one that came to my mind right now. But if you look at that as an indication, it's actually kind of performing on par with the spiders. Number two is, we had a golden cross in momentum. So I'm not going to say too much about that because that's going to be Jeff's job next week. But that's a good sign. It has a bullish divergence in momentum. And we did take out this January 6-month calendar range high. So we're going to get a new reset up here for July 1. But nonetheless, if you look back to the old July 1, it's going to be kind of close to that. So let's just say this thing gets through 35. That's going to help everything.
Yeah. Yeah, you're right. All right, well, let's swing the dial around here. And Norm, did you want to give a little
I'm still working on fake out breakout.
Well, I'm still trying to figure out 6-month calendars. You know what I mean?
There's a song called "Break Up to Make Up." Break up, make up. That's all we do. Anyway, I think Mish and I have been married so long we forgot what that probably looks like. But well, yeah, I mean, I'm looking at this chart, and as I said before, I'm mostly a commodity guy. I've been, as I've mentioned in some of my other thoughts, my focus has recently been on the metals and especially the platinum, which is the most ignored
Well,
one.
why don't we throw up some of that, Norm, and people can enjoy the expertise that you can share in the metals, because they are, the gold today I thought was an important close. I got these averages right at 33.60, and it's sat right on 33.60. So it seems to me like there's a decision going to be made in gold, and it's either going to be new highs or go down to 3,100.
Yeah, I'm going to take a look at that. And I think Mish has to unshare her.
Yeah. Can you? For some reason, I cannot.
You did it.
It worked. It worked, right?
Yep.
Now, opposed to Mish's, I mean, you use so many. I don't know how you keep, but you're so good at what you do that you've put it all together. And look at these simple charts. This is all I deal with. But here's the. I mean, this is the daily chart in. This is platinum that moved now 45%. Literally in the last 6 weeks.
Mm-hmm.
So, what's going on? Is it why this metal and not others? I mean, you can. There's a lot of catching up to do. If you remember back in, I think I'm going to have to tell you about this, Mish. Harry may remember back in 1980 when this market went to. I think it went to $1,150 when gold reached $850 and silver went to $50. When the Hunt brothers were controlling, got everything moving.
Oh, but honey, you flatter me. I was in the pit trading sugar.
There we go. Now you're getting hard to believe. Yeah, you're getting hard to believe. But I'm just saying that then you remember. But this is telling us something, I think, and it really is telling us the metals are back. But what I look for, just to give those that are day traders some guidance. I really look for when the move. This is the 34, and this is the 8. And again, we're day trading here. This is the daily chart. But in a sense, it actually is more accurate. The longer time frame that you use in a candle chart, the more accurate any system is going to be. At least that's been my discovery over my testing over the years. But when you have the 8-bar exponential moving average very close to the Fibonacci 34 exponential moving average, you're really waiting for something to happen. I mean, what was it telling you? It's telling you that over the very long term, if 34 is long, and the short term, you're getting the same action, and they're waiting for a decision to be made one way or the other. Well, the decision was made here. I mean, this doesn't look, you didn't see this, but this breakout here looked a little bit more. This one here took out all the previous highs. And then when you got to here, you were in free air. This is where fear comes in. And as you know, Mish and Michael, my thing for years, and still is to a large degree, the mental and emotional part. It's very hard to confirm, to take action when you're in nowhere's land, even though it's some of the higher probability stuff, especially when you see another. Maybe I'm now, after that chart you showed me, I'm seeing head and shoulders bottoms on everything. But once you have a breakout of the shoulder like this, a separation of the moving averages, a corrective action, which is usually the first indication of the start of a trend, and then you get movement. This is something that you don't know where it's going. Well, it went far. I mean, we can get into the fundamentals of why this is happening, but certainly unsure nature of things. I think that minor metals, even though it's more expensive, it used to be. I mean, when gold was $850, this was $1150. All of a sudden, gold is now twice the price. It doesn't belong there. There's going to be a balance, from what I see. But I just wanted to point this out that when you got to, if you're a day trader, let's look at and you're going to see the same similar action even in it's a little bit close up. But I wanted to show you really the importance of the 8-bar exponential moving average. They used to call it the golden mean. At least the CTA that trained me on the left side of my seat, that we used to be piled together. It taught me about the relevance of the 8-bar moving average, but the exponential even. Look at the lack of breaking through it, especially on a closing basis. Once it did on a closing basis, you've got a pretty good probability of a return. But even here, you're not touching it. This is where traders get hurt. We can talk about that at some other time. But the idea is that this is a market that is active. And I think, was it you, Mish, that said you go to active markets? Wherever the action is, that's where you want to be. And again,
are these 15-minute bars?
But this one is the 60. I went to the 60, and you can see the relative closeness here, and then the breakout, and then the final breakout here. But this is what I wanted to point out. When you have for the day traders, and these are not perfect charts, but in general, when you have a lot of air between these two moving averages, I'm using the 8 and the 4 in this particular case, you likely will see a correction toward that. And then you have this right here is you probably heard of the loaded gun simple trading plan. This is the loaded gun signal, a hesitation with a breakthrough through the 8. And it happens in the perfect place. So this is one of the 4 sweet spots that are high probability, where when you decide what kind of position sizing you want, you have a range. You want to put on from 2 to 4 contracts, 2 to 8 contracts. This is one where you're looking for the higher probability. The larger candles, for most people, can be the safest candles as far as the direction is concerned, depending on where it is. So there's a very high probability candle. You've got the squeeze, you've got the absorption of this move, you've got the squeeze of the moving averages, and then you've got the breakout in a nice big candle. This was gift. This was a gift.
Yeah, and if I can jump in, I mean, one thing that I have been preaching for a long time when it comes to commodities is a couple of things that we learned from the floor. One is exactly what you said before, which is go where the momentum is. Why trace something dead when something else is moving? So if crude oil was dead, we'd all run over to silver, kind of thing. Mm-hmm. Number 2 is that commodities are so emotional that when they go parabolic, you can have a technical point to it, but you get those incredible moves like that. And also the other thing, of course, is that they're not stocks. They're not investments. You're not investing in a company. These are trades. Sometimes they last for a long time. Like silver and gold have been trending up for years now, but sometimes they're very short-lived, like the cocoa trade from last year. So the other thing is, and I know one of you mentioned it before, is risk management for all of these is incredibly important.
Oh my God! It's if you're not, some of the best trading plans have, if you look at the 40% winners and 60% losses, that's because they're cutting the losses short when it doesn't happen quickly. There's There's sex to every figure. Here's that loaded gun figure again, where you have what I call a hesitation candle, and then a breakthrough through the 8. This you have a similar one right here that led to here. You have one here that leads here. You've got one here that led to this. You've even got something here that leads to this. So I'm always looking for what I call the loaded gun formation, if it's in the right place. If it's going against the 34, there's going to be some hesitation usually. If it goes with the 34, in other words, the 8 below the 34, in the case of a short trade, you've got some much higher probability. But these moves have been fantastic. You're right about this, Michael, because this is the daily chart in gold, and you're seeing a tremendous accumulation, an equalization of those two moving averages. Something's going to happen here, and generally, I think Harry will confirm that I could draw the lines here, but this is usually a sign that we will continue higher. But we'll have to see. You got to wait for the breakout. But again, movement toward, and then squeeze of, I call it a squeeze of the moving averages, another squeeze here, another squeeze here. At all times, the 8 is above the 34, but you got the squeeze waiting for the loaded gun, in this particular case, trigger. Anyway, Harry, I want to hear from you. You've been quiet. That scares me.
Thank you, Norm. I thought it would never happen. No.
One thing
we were running out of ice water over here. Now, so anyway, on the gold though, it does look like it could be a very key area, and right now it does look like it might want to break to the upside, and that little drop that it just had could have just been running the stops underneath those lines, and then now take it up. Could be like that. Harry, you've got the trading room over there, and I know you've got a lot of great ideas. One thing that you showed me a while back, a year or so ago, that CRISPR stock, CRSPR, and I just put a bunch of stock in my portfolio, and then I looked at it today, and it's like almost double what it was. So some of these biotech stocks, they can really pan out pretty well.
Well,
can you share your chart and look at just a couple things real quick, Summit and Viking, and see if you see any potential in them real quick?
Oh, Viking Therapeutics, now you're talking my language, because I'm all over the diet drugs, and they're going to create a pill form. And
everyone's really negative on it because of Robert Kennedy and the Doge crowd. So the sentiment is pretty out of favor. So maybe there's an opportunity. I don't know. Can you share your screen there, Harry, though?
He's doing it now.
You see my chart right now?
Yeah, you're good right there. Yep.
You're going to be sorry, Mike. Okay.
Which one did you want to see?
Let's go Summit and Viking, SMMT and VKTX, just to see if you think there could be something going on there.
I've been following Summit for a while, and when it broke through this level right here, that red line I had right there that one day, and then came down and formed a little wedge, as soon as it broke out, that's where we bought it, right there at about 880, and we were out about 22, 23 for a triple, and that didn't take a month, so that was a beauty. And then I told everybody, this is overbought short term. It had gone from 210, listen to this, 210 to 33 in about a month, 5 weeks. So obviously extended to the point where we needed to consolidate, which it's doing now, from 90 days, nearly. But it did have a pop breakout head fake. It wasn't enough volume, I thought, and the technicals didn't look as good. And I told my people to stay away. It may need to retest again. So it did retest. Look at that right there, right where that low was, and right where this gap was. So this gap really held, and the stock popped out. Now the declining top sign that I drew here was broken out, and if you look at really short term, this is a breakout above 3 moving averages, the 10, the 21, and the 50, and those are the 3 I'd follow. When you get a breakout out of a base, this is actually a V bottom with a right-handed extended coil. If you want to be exact, when it comes to terminology of patterns, I think I know it as much as anybody might. Anyway, V bottom, right hand extended, narrowing coil, breakout with volume, and now it's set up. I think the stock would go into the high 20s to 29.30 as your next move. And if we get below that, if we get one of those parabolic moves, it might be, high 30s. On the downside, I'd be stopping under 22 and a quarter, 22 and a half, under that low right there.
How about that Viking, VKTX?
Yeah, I know. Well, matter of fact, way back, when Viking was back in here is where we really made big money with the stock. But let's take a look at it where it is now. I like this chart for 2 reasons. Number one, when a stock has had this kind of a move, literally from 2 to 100 something, and then comes down and does a major fib retracement to the point where it literally went from 100 or $99 to the April low when it was trading at under 20. So it lost 80% of its value roughly. When I see a V bottom with a platform like this is called the V bottom of the right hand extended platform. It's also a left shoulder, head, and right shoulder, a wide right shoulder. But regardless of, and by the way, Norm, I heard you mention the word head and shoulders 3 times, and 3 times I looked at it and said, that's not a head and shoulders. Because to me, it has to be a little bit more symmetrical, has to have a parallel shoulder line as well as a neckline. And then the breakout here today and yesterday, this looks like it wants to go. I would like more volume. I like a little bit better technicals, but I think the next move gets me to 36. If it gets to 36.5, you might see a run up somewhere up in this range, or these lows and these highs and the gap is. So I would say 40, 46.7. So 36 and 46. If you get the volume and it breaks out with some energy, that's what I look for.
Harry, can I make one more comment on that stock? Because I have been all over this stock, talking about it on media. And that is, going back to those calendar ranges. I have my chart in front of me. I don't have to show it, but it actually just today retraced back to the January calendar range low. At the same time, it's forming its new July calendar range high. At the same time, we have a bullish momentum a bullish divergence in momentum, which means to me that with today's high, which was what, 32.10, in the next couple of days, if we continue to hold over 32, yeah, there might be some resistance on the way up, but I think you have a really good opportunity with this stock. And I don't care what happens with the political world. I don't think anybody's going to stop the what I'm calling thin economy diet drug train, because people are just too darn happy in their new bodies.
Mm-hmm.
Well,
Yeah.
my analysis is two things bother me. If I always give you the negatives. Underlying technicals are flat, neutral, and the on-balance volume is going nowhere. It's not being accumulated. So for me, until these technicals thrust, I'm going to be a little more cautious. There's so many, and I mean so many better patterns. I come up with dozens every day, and I give my people a focus list of about 20 stocks a day, seriously, and 6 to 8 trades a day at least, because there's so many breaking stocks moving and breaking out. But yeah, this is overall no complaints with this chart. If I'm a stockholder, I'm happy that it broke its trend line, it formed the base, and it's breaking out. I'd like to see volume a little bit better, and the underlying technicals start to search to confirm the trend.
What else you have on the docket?
Well, I got a ton of things, but give you an idea how we trade every day.
Sure.
We look for stocks that will explode. And if you look at Sequans, for example, take a look at this move. When it broke out of the base, formed a little flag, and then popped right there. We were long a couple of days ago at 2 and change. By the end of the day, most of us were out at 3 3/4 for about 75% trade, in literally in 4 or 5 hours. Now it ran up beyond that and then formed a falling. By the way, I'm not recommending this stock. I'm just telling you how we day trade in my room. We formed a falling wedge, and when the breakout occurred, we went long. It was very quick in the morning. It spiked literally from about 440 to about 520 for 80 cents quickly. And then it went sideways, and this stock has been going, after such a nice move, the stock is coiling bullishly. I mean, here's a stock that's gone from $1.92 to almost $6, tripling, and it doesn't look like it's anywhere near done yet. Look at this move, parabolic. And I wouldn't be an aggressive buyer, but I also, if I was holding the stock, I would hold it with and continue to raise my stops every day. Matter of fact, within the day, when I'm showing people charts, 1-minute charts intraday, I'm always showing them where support, resistance, and what the patterns look like all the time. But that's just one example from today. There's a lot of, here's a stock I like in a really group I like. Lightbridge is considered a nuclear energy stock. I'm not clear why, but that's what I've been told, and it acts like it. Exploded, falling wedge. Exploded, falling wedge. Each time it broke out of the wedge, we went long. Today it's got a bull flag. We went long on the breakout. Now, the volume isn't big enough yet, so I'd be careful until it breaks out above 1471 with volume. But that and OKLO, we've made a fortune with this stock since it broke out here and then again here. And we put 2 swing trades on it and made very, very big dollars. Right today, after forming a wedge of about a month, literally, take a look at the 26 million shares that traded today on the breakout. I know it's going to look crazy, but a parallel move to the top of the channel says this is a $100 stock. It's
Oh
trading
boy.
61.
Well, it looks like it's forming a head and shoulders there, Harry.
I tell you
Well,
what it
no,
is. It's
you know
breaking
what?
out to the upside, Harry. And
Well, Harry,
Let me tell you, wait. He is not incorrect. This is a left shoulder, a head, and a right shoulder. And let me tell you something else. The volume patterns on the head and shoulders, this is what most people ignore. You have to have heavy volume on the left shoulder, decent volume on the head, and low volume on the right shoulder. So if this rolls over, if the volume doesn't pick up, this could be a head fake and roll over. But it's easy enough to put your stop under 51 with 51 and a
Yeah,
half.
okay. Now you're talking. Do you remember Harry when we on Saturdays when we got the charts that were the oversized charts on like tissue paper, and you had to put your ruler down on there and draw
That,
the lines?
that was daily graphs.
That was daily growth. That's what it looks like you're doing here. These look like the lines on my chart. You know?
You know, it's funny. I used to be one of the premier analysts for TC 2000. This is what this chart system is. And I used to go on the road shows with them and do some presentations. And Mike Thompson, the national head of sales, would always say to me, "Where are these lines coming from? What is?" And when I explained it to him, he said, "Now he draws lines on every chart because all they are is support, resistance, trend lines, and areas where the stock had like here gap, flag, pop, another gap." But this whole pattern to me says it's a long move up and a nice consolidation, but this could be technically 1, 2, 3, 4, 5, wave one and wave two. We could see a 3, 4, 5 and get up to 140.50. It wouldn't shock me if this stock doubled from here, especially with the group being as hot as it is. If you take a look at SMR, the other stock in that group I love, same chart. Look at this pattern.
wow.
And okay, and this stock measures to me 70, 80. It's trading 41.
You have to have a lot of patience to trade even that, but yeah.
But
can you put up
mostly
the, Harry,
uh,
can you put
yeah.
up the ETF URA, uranium?
Yeah, that's another group I'm following closely, and I like CCJ in particular. That's the leader in the
Right.
group, and CCJ is the biggest uranium purveyor in the world, I understand. And the stock which we gave as a swing trade when it broke through the neckline of this left, it's almost like a head and shoulders, but technically, Norm, this isn't a head and shoulders. It's a left-handed extended V bottom
And
breakout.
Yes, yeah, no, there's no shoulder there, but yeah.
well,
Right.
what I wanted to point out is what makes trading so amazing is that you're showing these stocks now. I bought uranium at $20. Why? Because after making the new low in April, it had a really beautiful reversal pattern and then took out the 50-day moving average, which was really darn close. And so I got long right there at like 20, between 20 and 21. I'm still in this position because I'm not day trading it. The ad was when it couldn't break back down under 35, royally under 36. It was pretty obvious. So I just want to make the point that, I love these stocks. I wrote them all down that you just mentioned because the nuclear space. But, this is what making right now so fun because all you have to do is listen to what Trump says and he kind of clues you on the areas that he's excited about. And he started talking about nuclear at the beginning of his term. And then when we had that big dump, that was the opportunity. So I just wanted, these other stocks could continue to go up. Absolutely. But it's just a different stock. And I only wanted to bring that up because of Viking Therapeutics. Because like I said, in that case, I think that's a mega trend, the whole diet space going forward. So
Mish, did you say Trump cues you or calls you? Is
he
you the
calls me. Oh, yes, he calls me.
Calls
Yes,
you? I thought he was calling Harry. Come on.
He doesn't have to call. That's the thing. Is if you
Right.
just listen to what he's saying, like right now there's a whole debate about the yields going much higher or the yields going down. Well, what does Trump want? He wants those interest rates down. Is there any denying at this point that this man at some point is not going to get what he wants? So everybody's making the case for screaming higher yields, regardless of whether you think commodities are going to explode or not. That's a whole other conversation. One thing I know is I'm watching those yields very carefully because he's basically saying by hook or by crook, I may not be the chairman of the Fed, but I'll get rid of him and put somebody else in there who will. So that's the same thing that kind of happened with the nuclear energy space.
Yeah.
Harry, do you have a couple more you want to talk about?
That I could talk all day about stocks.
I know.
Here's a company that I love that we made a ton on it because we traded this wedge long the breakout here long, and the breakout here long. And then when it came down, we were short until I said it's that support you want to cover. That was an April low, and they had that huge day, which all stocks did. This went from 1889 to 24 in one day, and it did it on pretty good volume. Then it formed it broke out of above the moving averages. But look at the stock today, for example, up another 775 or 18% on a mere 26 million shares traded. It's one of the biggest volumes of the year. It's a platform, and it's an easy stop because if it goes below yesterday's low, under 43 and change, that's your stopping point. But if it breaks out above 55, we're looking at 70, 80, 90. And that's another one of those stocks that institutions love because I know at least 3 institutional clients of mine that have been all over this since it was a $16 to $20 stock down here. But that's one of those momentum stocks that could just go crazy. And there's so many of them. But we need to talk before we get off the air about Bitcoin. Can I do that?
Sure. I know MicroStrategy intimately.
I'm talking about the commodity itself. This is the chart on Bitcoin. Okay. I want to point out from an Elliott wave standpoint, when this stock was down here, I said we're looking at 1, 2, 3, 4. We break out of this falling wedge, go long. I was at 87. It's now 119.20, at 123 today. But the top of the channel says this is a 1, 2, 3, 4, and the fifth leg is a 1, 2, 3. If we get a wave 4 and it's consolidating flag or something, I think we can go to 145.50. That was my target way back when, based on the angle of ascent and the rising channel. So I'm thinking if we get a market blow off, and I think that's coming. I really do think. And by the way, I also wanted to just quickly say we were talking about the IWM. It's trailing, and so are the transportations. At the tail end of every major bull market, and I'm in my 70s, and I've been doing this 50 some odd years. I'll guarantee you at the tail end of every major bull phase, you have small caps spiking and running. Look at these low price electronic and biotech stocks every day, up 1, 2, 300% in a day. And so we're starting to see that. And I think we're at the beginning of it, or maybe a few weeks into it. But I think the market sometime between now and August, maybe September, could have a blow off and then come down into the fall. I'm not sure. This is all theoretical. That's the seasonality of it. But from a Bitcoin standpoint, I would be awfully careful about anything Bitcoin related. One of the stocks that we did very well with is the ETF for Coinbase, symbol CONL. And when it broke out of this, look at that now, Norm, that's a head and shoulders. Left shoulder, head, and there's a right shoulder.
I feel better now. I feel much better.
Okay, look at the volume and the breakaway gap. And then it formed a beautiful three-wave corrective 1, 2, 3 flag. We were all over this, and it exploded out of it, went vertical literally from 22 to mid 50s. It pulled back for 3 days, and here it is set 57 and challenging the all-time highs up here. It could blow into the set 90 to 100 range or more if Bitcoin goes to 130, 140. So that's something to keep an eye on. But it's overbought. And the problem is for me, it's 1, 2, 3, 4, 5 wave 1, 3-wave corrective wave 2. This is wave 3. And we were in a consolidation fit, but an upward consolidation that could lead to a blow off. I'm thinking maybe mid 70s or about 15 to 18 points more on this one. But this is based on COIN, the parent company, Coinbase, which went from 140 to almost 400. That one is near the top of its channel, so that would be cautious on this one. But momentum is phenomenal in some of these stocks. That one, and you can look at Mara, same kind of inverse head and shoulder breakout. And, CLSK is another way I follow closely. There's just a bunch of stocks in that group.
What about HUT, HUT?
MSTR, excuse me. Yeah. And yeah, HUT's another, you're right. A little different pattern, but, still bullish enough.
Mm-hmm.
Harry, can you look at Chainlink? Does your platform give you LINK USD?
LINK?
Yeah, link, not link interlink electronics, the chain link.
No.
Would be no, okay.
Well, not in my system here.
Okay.
Can you sing "Don't Fence Me In"?
Hey Harry, Big Bear Holdings, it had to pull back to $6. I was wondering if that might be it because it's back at 7 now.
Well, what it did do is it filled that little gap in here. Oh no, it got
right.
It
did. That's what I mean. Yeah.
It actually didn't fill it. And what most people don't realize, I hate this. I hear it so many often. It's got to go back and fill the gap. It could do it 5 years from now. It doesn't have to fill the gap right away. But
Yeah.
sometimes the gap itself is support. Now here, 627 was the gap. It got into it to about 609 and then reversed. See the volume, Jim? It's not enough. For me,
Okay.
a reversal day has to come in a big volume. If tomorrow it takes out 720 and the volume picks up, then you may be on your way back to 8.75, and the secondary target, it would be about 10.5.
118 million shares today.
Yeah.
Yeah,
Right.
I know we're close to the end, but being a commodity guy, there's been a lot of action in copper lately. Can you bring up Freeport? Maybe I'd like to see maybe Mish and your analysis of what's going on here
Well,
because
same thing happened here. This was a swing trade for us. When it broke out and pulled back and started to move, I put it out here. And the reason I did it there is I waited for it to see if it would hold the 50, which it did for a month. Then it started to really move. We were long around 38, and we got out a couple of days ago at 48. And it hit 49 or something, and it backed off. The only reason I sold is because it had multiple waves up already. And see that spike in volume? I always sell into volume when a stock's been extended because it usually means it's going to pull back and consolidate, which already started, it looks like. Nevertheless, you don't need to stop this one until it breaks 43.5. That breaks the trend line, breaks the moving average, breaks lateral price support. So that's the take right there. That level is where you want to stop it. But the target is now 52.5, 3, and then maybe high 50s if it continues the trend.
And if, and everybody has their own favorite indicator. I mean, obviously, apart from looking at copper futures, let's look at COPX. Because everybody gets used to their own thing, right? So this was what I got used to trading. Caught that big move when it first went up last year, and then really basically hadn't touched it. But 40 was such a huge breakout. You have a trend line there that kind of shows that 40 breakout from the high.
Yeah, right here.
Yeah, that one. To me, that was when copper really broke out, when it took out 40. And so you're getting into the resistance zone, like you say. Would I be buying this up here? Probably not.
I agree.
Do you agree?
Yeah, I agree because it's so extended. And I think there's a lot of stocks that look like this. This one's gone from 30 and change to 47 and change. 17 points on a $30 stock is about 80%, and it did it in 90 days. So, and it's health. And look at the volume down here at this level. When I see a volume burst into a peak, like take a look at this volume back in September. Where did that come? Right there at the high. You got to be careful about a long extended run followed by a big volume surge. That usually means we're near a peak. I would not be shocked. There is some support right here across this level and a gap in there, but it wouldn't shock me if it retested the 50 at around 42. And if it broke that, you can see maybe 37.
Yeah, I mean, and it really spiked up, obviously, with the 50% tariff threat, but we know that most likely will change. And so, yeah. Well, thank you. That was good. We totally like silver. We kind of targeted it to $40 an ounce. It got up like to 39 something, and then closed red today. It's a little bit overbought as well. But I think that you have to keep your eye on silver too. I mean, that thing has just.
To be 100%, I'm a big silver fan, and I'm not. Let me point this out. I've never been a gold precious metals bug, but when you look at the difference between HEQ and at 1, 2, 3, 4, 5, that's another thing, by the way. We have short-term 5-wave move. It's probably due for a pullback retest near 50, if not lower.
Yeah, well, it's overbought. It was obvious today that when it opened up and couldn't get up through 40, it was going to flip around it, which it did.
And it's doing. And I
remember that high. Remember the Hunt Brothers high at 50. So that's really eventually where we'll shoot.
I think so. I think so too.
This isn't silver. It's the silver ETF.
I see. No, I understand.
Right.
Yeah.
But if you look at this, gold, the GLD, Gold Trust.
Oh my God.
Look at this consolidation in here. Now it's 90 days going nowhere, and that's bullish in an uptrend. But while that's going on, silver's going in a 5-wave move up. So this is outpacing, and the positive divergence, or should I say gold, is a negative divergence. Now, just because this looks like a bull phase, I have one expression that I learned years ago. The higher up a pattern that looks bullish occurs in a trend, the less reliable it is and the more risky it is. So this can turn into a breakdown and reversal at any time.
Well, thank you, Bunker Hunt.
Right.
who had
But
22
but
limit
but
down days in a row.
if the,
Well,
if the
I'd be really interested in the gold to silver ratio too, because that thing went to new highs this year, went to 114 during that April crash because everybody was running into gold as the safety play. And now it's about trading at around 86,
Yeah,
which is
that
still
is.
historically high, but it's come off a lot in the favor of silver versus gold. I've been such a huge bull in gold and silver right now, but we'll see what happens. I've definitely calmed down a little bit, and
Yeah.
I just keep trailing up my stops as opposed to just taking profits because I learned from the commodities days that you don't want to be out of it and trying to chase it when it all of a sudden one day wakes up and it goes parabolic.
Smart.
Yeah.
I
We're
also
going to
want
be
to
the
add,
top of the hour here, guys. So, Michelle, you want to start out by letting people know how they can get a hold of you and if you had any special offer you wanted to extend?
Well, yes, actually, a couple of things. One is if you are interested in everything I just talked about with calendar ranges at the beginning, I write a blog. It comes out 3 times a week. You can find it on our marketgauge.com site. There it is. And if you scroll down a little bit, just scroll down on that market gauge right there. Nope, keep going, keep going. There it is, where it says current trade insights. Mish's daily market analysis. So I encourage you, it's free, sign up for it. I give a lot of information. Sometimes I cover a sector like uranium at the bottom, and sometimes I talk more about my family. But I work really hard at giving great actionable information. And the other thing is I just started with a company called Slice, which is a mentorship company. And if you go to slice-app.io and search for me, I've been giving public and real-time trades there as well. So those are my 2 best places to find me lately.
Great. Hey, Norman, yourself, way to get a hold of you and
Yeah,
special
real
offer.
quick, I do want to
Okay.
say, actually go to theirmoneyyourprofit.com. This is my main site, the Discipline Trader. But if you go to theirmoneyyourprofit.com, it's the work I've been doing lately, and what I think is the biggest breakthrough for retail traders since the micro contracts, which is prop trading. It's a controversial thing, but I think when you get it right. But I want to, if you can visit it, it forwards to a different site, but theirmoneyyourprofit.com. Take a look at that. But I wanted to mention 2 things. One is that I'll be speaking at Wealth 365 tomorrow at 10 a.m. If you want to hear about how not to bust out on your funded accounts if you're a prop trader. But I want to make one basic point. You've heard 3 people tonight, and although you haven't done much commenting tonight, the option professor, but
I'm a moderator, Norm.
I tried to take that position. I'm sorry. The idea is that we seem to be coming to very similar conclusions, whether you're looking at Mish's level or the old school Harry's level, which are, or I say old school, but they are proven lifetime kind of thing, or somewhere in the middle where I am, where I'm looking from a commodity standpoint. I'm willing to take a little bit more risk, but we all seem to be coming to the same conclusion. My focus or my suggestion to you is that when you're looking for somebody to guide you, of which we all can do that for you, look for somebody that matches the way you think and feel, something that's comfortable to you. Do you like a lot of indicators? Do you like specific indicators like Mish has? Do you like old school? Do you like somebody who may be more creative? Find a match, because that match will help you in the mental and emotional part of things, because that's where people go wrong. Well, I think we're all going to have the same calls when they happen, or most of us most of the time. But I'm just saying, for you to, as a retail trader, to participate in that, you've got to have confidence in who you're dealing with, and that is based on how you feel about the way they do things. So operate there before you commit to one. It'll make it a lot easier from a mental and emotional standpoint.
Sure. And Harry, could you just explain how people can get a hold of you in that trading room you've got?
let me share, Shell.
Thank you.
Looks like I have to, there you go. So this is my website. That's me. We have our theory on our site is basically stop chasing stocks and momentum and access the ultimate technical stock market service for day swing traders. I can brag that I'm
Harry, you're sharing my YouTube channel.
It's very beautiful.
Yeah.
I don't know. Let's see what I can do here.
Maybe he goes
Okay,
to
there it is.
there you go. Perfect. Perfect.
Okay. So the bottom line is that at my site we have hundreds and hundreds of traders with some of them have been with me for 15, 20 years. I can brag that I'm one of the first trading rooms ever on the internet in 2001. And I've been around since 24 years doing that and over 50 trading stocks and working for 3 brokerage firms. But you can get a free 10-day free trial. Come in, spend a couple of weeks with me, see what we do, see how we do it. I think you'll be comfortable with what you see and probably want to join us. It's a fun place because we have a lot of fun, but we make a lot of money. And a lot of people like to mentor. And besides myself, there's people that will take you under your wing if you don't have the experience that you want to have and learn. They say that a couple months in my room is like 2 years in a classroom. So come join us and check us out and see what we're all about and make some money in the same time.
Well, let me know, Harry, when you do a special edition of Head and Shoulders, Tops and Bottoms. I want to jump in there with you.
Okay. Well, anyway, start a 10-day free trial, no credit card. Just come on in, join us for a couple of weeks for free, and enjoy the ride.
Sounds great. And if you're interested in an option seminar, we do have an option webinar tomorrow that's free of charge. If you'd like to get the link, it's optionprofessor@gmail.com. And you can send me an email and we'll get the link over to you. All right, Michele, it's the first time I've talked to you. It was great and very informative. So thanks for being here today, Michele.
Oh, thank you so much for having me. It was a lot of fun, and it was great to hook up with Norm, who I haven't seen in a long time. So good to see you,
Hello at
Norm.
home. Hello at home.
All right, guys. And Norm and Harry, always a pleasure. So we'll be back again sometime. And right now, I'll just turn it back over to David. Thanks, everyone, for listening.
All right. Yeah. Thanks, everyone. Great discussion. So just a quick reminder for everyone, be sure to join us July 22nd, 23rd, and 24th. That'll be 30 favorite indicators over 3 days that we'll be sharing. I have a lot of great educators scheduled for that. Everyone on today's panel will be there except Michele, who, as she mentioned, her business partner, Jeff Bish, will be on that event. So, yeah, so that'll be a great set of education, and that'll be just on TimingResearch.com. There'll be a link to join the room while we're live those 3 days. So, also, just a reminder, be sure to subscribe to Timing Research on YouTube or on Substack or your favorite podcast app to get all the archives and presentations. And then also just want to thank my panel again for today. Michele Schneider of MarketGauge.com, Harry Boxer of TheTechTrader.com, Norman Hallett of TheDisciplinedTrader.com, and the Option Professor of OptionProfessor.com. All right, thanks everyone.
Thank you. Bye-bye.